Hello, everyone. Welcome back to another week installment of an out of Extra and Speed Live. I'm so excited to welcome you to yet another promising edition. Um, Hello, hold on a second, please. All right, so sorry. Okay, I'm just trying to sort out some things here. Okay. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Let's run through our daily routine to quickly confirm that we are all on the same page here. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So saying hi in your comments in the comment section will make me confirm that we are all on the same page. So let's run through this quickly while I load up my chat. All right, so okay, I can see a handful of comment right here. Well done, guys. Thank you very much. I can see your comments. Siaka, good morning to you. Wiggly, good morning. Ate Smos, thank you very much. Parks87, Mulat, Zealand 87871570. Thank you very much. Akari, good morning to you. 033, good morning to you too. All right. Tas M, good morning to you too. Emanti 121, good morning to you too. Thank you very much, guys. So I think on this note, I will take this as a confirmation that we are all good to go here this morning. It's on this note I welcome you all once again. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I'm going to be taking you on a trading journey where we shall be evaluating the current market conditions using simple parameters and, of course, fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list since the beginning of this week. Well, since the beginning of the week, we have been monitoring four major assets, which includes the US All Spot, the USTech 100, which is popularly known as the Nasdaq, and of course the GBPUSD and XAUUSD, popularly known as the gold spot, and all of which we were able to identify simple setup. So we are going to be looking at how we are going to be managing our existing position if we have any, and of course see how to use the data we have on the charts to project and position ourselves ahead of the New York session today. And for those of us who are joining us for the first time, you're highly welcome on board. And you might be asking, what is this all about? Well, this platform is designed for us technical traders, where we come together on a daily basis in anticipation of the New York session, where we come to review our existing positions if we have any, and of course strategically position ourselves ahead of the New York session for trading opportunities. This happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I do encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And of course, I do encourage you also to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand how we use our strategy and eventually be able to, of course, utilize the information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been part of this community for a while now, you know how important checking the economic calendar is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar, we usually focus on high impact events from economic docket that affects the assets on our watch list. Now, for this week, based on the assets we have been monitoring so far, we are going to be focusing on the United States and the United Kingdom economic docket. Now, I was able to pull out the event for today, Wednesday, October 25, and in fact, we do have one high impact event and a medium impact event from the United States economic docket. Now, the first one here is coming in about 3 hours from now, and this is the new home sales change. Now, the new home sales data is released by the US Census Bureau, and it's an important measure of housing market condition. Now, this is a very impactful event that gives us an insight into the health of the housing sector in the United States, which is one of the key factors that influences the positivity of the U.S. economy. Now, generally speaking, a high reading is considered as positive for the U.S. economy, which in the long run affects the U.S. dollar positively too as well. Now, if we look at the previous data here, the previous data came in at minus 8.7% for the month of August. Now, we do not have a projection yet for the month of October, for the month of September, sorry. So I think probably before an hour or two before the event, we might likely be seeing something to compare what the actual data will be. And then in about 10 hours from now, we are going to be looking forward to the Fed's chairman's speech, which of course the anticipation of this event has influenced the market sentiment. As you will see that most of the assets on our watch list have been in a range in the last 24 hours. And one important thing about this speech is that it plays a major role in influencing the market sentiment, as whatever it says here will provide us with an insight into the central bank's outlook on the economy, potential policy shifts, and interest rate changes, hereby impacting trading decisions and, of course, the market sentiment. So these are the two impactful events we are going to be looking forward to. And of course, we do know that the anticipation of this event alone has a tendency of influencing the market sentiment, which will reflect on the chart as price action. Now, talking about price action, the first asset on our watch list for this week is the US All Spot. Now, on the US All Spot, we have an interesting position running, a profitable position, let me put it that way, as we have been selling the US All Spot since the beginning of the week. And in fact, for this week so far, I will consider the US All Spot as the most profitable asset on our watch list as at this point in time. Now, let's run through how the week really started and what led to the decisions we made at the beginning of the week. So here on the 1 hour time frame, during the first 10 hours of the new week, we noticed how price action was confined within the range between the $87.50 zone and the $86.60 area to emphasize the level of uncertainty at that point in time. And of course, you know how we do it in this community. Whenever price action falls into a range like this, we do expect to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in that regard, and considering the bullish momentum that has gripped this market in the last couple of weeks, I told you how I took advantage of a buy position right above that area, and I also told us all that we could have a buy stop order anywhere above that structure to capitalize on the uptrend scenario. But unfortunately for us, price action nosedived to the downside, taking us out of that buy position in a loss. And fortunately for us, remember that the support line of that range situated at the $86.60 level was another area we identified for selling opportunity. And we saw what happened here. Since that day, price action has been finding lower lows and lower highs, giving us a sell position in that regard, and hereby recouping the loss we incurred at the beginning of the week. Now, if you recall, during our live session yesterday, we were also able to identify a simple setup that helped us to position ourselves for the bearish momentum that we witnessed in the last 24 hours. Now, during our live session yesterday, we acknowledged the zone around the $85.50 level and the $85 area, where we were able to identify a range. As you will see here, price was confined within the $86 area and the $85.20 level, where we were looking out for either the breakout of that range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. And mind you, remember that we had a stop loss just right above the $86 level on our first sell position for the week, which actually was not tested at all, as we saw price spiral all the way to the downside, giving us another. If you still have your sell position running on that second position, we have about 180 pips running in profit. And from the first position we took here, we have about about 320 pips in profit. So we have approximately over 400 pips running in profit on the US All Spot so far this week. So one interesting thing about this is that we were able to recoup the loss we incurred at the beginning of the week and made some more money on top of it. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, with that being said here, the next thing we want to be doing right now is to move our stop losses and secure the current sell position. And based on this current market structure, I'm of the opinion that anywhere above the $83.90 area remains an area that's suitable to place all your stop losses at. Now, remember that while we're trying to place our stop loss, we do want to be given enough room for price action to breathe. Now, with a well-secured position at this point in time, what is going to be our next line of action for today? Now, before we go into the details here, and for the sake of those who are not part of our live session since the beginning of the week, let's run through the higher time frame so that we can have an holistic perspective, and at the same time, those who are joining us for the first time will be on the same page with us. Now, back to the 4 hours time frame, let's refresh our memories as to what we saw here at the beginning of the week. Now, the first thing we noticed on this chart on the 4 hours time frame was that downtrend continuation pattern, that is the wedge which we saw here at the beginning of the week. So if we take into consideration this impulsive move, we saw our price transition into a wedge like this. And in fact, you know that whenever we notice this kind of setup on the chart, we are looking forward to a downtrend move where the breakdown of that support line of that pattern will be welcoming selling opportunities, which was exactly what happened at the beginning of the week. Then in addition to that pattern is that $87.50 area, which happens to be our key level for this week. And you know how we use our key levels in this community. As long as price remains below our key level, we obviously want to be looking out for patterns and structures that support the idea of selling. So everything we identified on the higher time frame here was in alignment with the current situation in the market right now. Now, after we have secured all our positions right now, what is going to be our next line of action for today? Now, if you look at the structure closely, you will see that price action is currently around the $83 area, where we have been noticing some buy pressure since the later part of the New York session yesterday, as you will see here. And because of this, this area here is going to be playing a major role in determining the direction of price action for today. So what we are going to be doing now is to scale back down into the 1 hour time frame so that we can see how participants in this market will be reacting to this level to decide what our next line of action will be. Now, if we look at this level here, there are two ways to which we want to be capitalizing on any trading opportunity here. Now, if buy pressure persists above the $83 area, where we begin to see some reversal pattern happen, we might likely see price climb back up into the support line of that pattern we saw earlier that was broken to inside maybe another wave of bearish momentum. And in fact, if price breaks down the $83 level, this might be another avenue for sellers to pump in more positions into their trade. So with that being said here, let's dive right into the 1 hour time frame to see how market participants are actually reacting to that current structure. Now, during the early hours of today, this is what I was able to come up with based on this current structure we have on this chart. Now, if you look at this closely, this is the $83 area where we have seen how sellers have found it difficult to break through this area since the later part of the New York session yesterday, hereby giving us signs of buying pressure around that area. Now, if we look at things from a economical perspective, I'm of the opinion that the bearish momentum we are witnessing in the market right now is as a result of the easing concerns about supply disruptions and recession fears. And in that regard, the oil market has encountered a headwind so far, at least since the beginning of this week. However, strong fuel demand in the United States and tightening global supplies act as a limiting factor, preventing a continued downturn in oil prices. And if we look at what has been going on here in the last 16 to 17 hours, price action has been consolidating the recent heavy losses, hovering around that 1 week low between the $83 level and the $83.82 area to emphasize the level of indecision going on in the market right now. And with this kind of situation here where price action falls into a flat channel, you know how we do it in this community. We want to exercise patience and wait for a signal to come, either in the form of a breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. Now, with the way things are going and considering the strength of the momentum that started this week, let's talk about the potentials of the sellers first of all. Now, if you look at the impulsive move that brought us to this point, it is very likely that price may transition into a downtrend continuation pattern, maybe in the form of a bearish rectangle, where the breakdown of the $83 area will be welcoming selling opportunities. Now, how do we intend to capitalize on this bearish momentum? Now, there are two ways to which we can capitalize on this. For those of you who have been part of this community, you'll be very familiar with this. But for those of us who are joining for the first time, we shall be running through how we are going to be doing this together. Now, the first strategy here is for those of us who have been profitable since the beginning of the week. That is, if you are part of this profitable journey, sold at the places we talked about earlier, definitely you will be in profit of over 400 pips in your kitty right now. So in that regard, you can afford to leverage on some of the profits you had made so far this week. That is, risk some of the profits you had made so far this week to test waters below the $83 level, and in that regard, placing a sell stop order below the $83 level will make quite a lot of sense to join a bearish momentum. And if it doesn't work, we know that we're just risking some of the profit we made. However, if you are joining us for the first time, that is, you're coming in from a clean slate on the USOILSPOT, then I will suggest that you exercise patience and wait for the breakdown to happen, then wait for confirmations before you jump into the sell positions. And the confirmation will come in the form of buyers finding it difficult to climb up and stay above the $83 area, and this would reflect on the chart as a continued selling pressure at the retest of structure, after which we can join the downtrend move. So this is how we are going to be getting ready to sell the USOILSPOT for today's trading session. However, it's not all the time that the market follows through these theoretical expectations on the chart. We usually see scenarios where the market conditions does the opposite of what we expect, and as a result of this, we want to be as dynamic as possible, keep all our options as open as possible so that we can be on standby to capitalize on any move the market presents to us. Now, in this scenario here, we want to be looking at the potentials the buyer have around the structure. Now, for us to consider buying the USOILSPOT, we will need price action to break out of the $83.82 level. And in fact, if it does break out of that area, I will need some confirmations before I want to jump into a position. Now, a breakout retest will be fine, or even come back to retest the trend line, which was broken in a couple of hours ago. Remember that at the beginning of the week, we had a couple of descending trend line which has been supporting this momentum since the beginning of the week. And if at any point in time price breaks out and breaches this trend line to the upside, then this will be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, giving us a beautiful opportunity to buy. Now, a breakout retest of both the trend line and the $83.82 level will be welcoming buying opportunities. Now, there is a caveat to this buy setup here, which is around that $85 area and the $85.50 level. Now, if you look at this, yesterday we saw the breakdown of the structure, and from a technical standpoint, whenever price action break out a key structure such as this, we do expect that at some point in time price may come back and retest that structure to incite a downtrend continuation. Now, because of this idea and observation in mind, we need to be very careful when we buy above the $83.82. So if we are buying and price moves into the structure, we need to exercise patience, move our stop losses, and secure the current buy position while we wait and see how the market is going to be reacting to the zone. Now, depending on how price reacts to the zone will determine if we are going to be adding more buy position to our existing trade or get ready to join a bearish move. Now, to give a visual representation of what we are going to be looking out for around that demand zone, Well, the first one here is if we begin to see continued selling pressure here, where buyers are finding it difficult to climb above that zone, then a double top structure or any reversal pattern mark out the neckline so that we can join the downtrend scenario. However, if price breaks out of that zone to the upside, then we are going to be back within the buyer's territory. Now, if you look at what has been going on here in the last couple of weeks, you will see how the zone here had played a major role in pushing price further to the upside. Now, if price will break above this area, then we are back within the buyer's territory. We want to feel comfortable in buy positions and look out for more opportunities to capitalize on that uptrend move. So you can see how this key area is going to be playing a major role in determining if we are going to be adding more buy position or getting ready to sell if price ever breaks out of that $83.82 area. So it's a simple setup we have on this chart right here, and our center of focus for today's trading session is basically between the $83.82 area and of course the $83 area, where depending on the direction of the breakout at this juncture is going to be determining where price will be going for today. So let's mark these levels out on our chart, as we will be needing them to guide our trading decisions for today's New York session. So if you do have any questions whatsoever as regards to my explanations and of course the current market conditions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, I can see your comment. Abit21. Abit21 is asking what the technicals for oil is. Is it a sell? That's what you're asking, right? Okay, I already talked about this, but I'll go through it all over again. Now, I just mentioned here in summary that our center of focus for today is between the $83.82 area, which happens to be the resistant line of this consolidation phase we are currently witnessing, and the $83 area, which happens to be the support of this range. As you will see, we have been noticing selling pressure around this area every time buyers bring price into this area, giving us signs that this level has a lot of sellers presence around that area. Then in the other side here, we have been noticing buy pressure around this area, as every attempt by the sellers to break through that structure has been met with strong resistance from the buyers. Now, what I said at this juncture is that we need to exercise patience and wait for either the breakout of the resistant line to give us an opportunity to buy into the zone, or we wait for price action to break down the $83 zone to look out for selling opportunities. So that is what we are going to be doing today. Exercise patience and wait for either the breakout of this range to give us an opportunity to either buy or sell. So patience is required here. Let's be on standby and wait for the direction where the breakout will be. So I do hope I answered your question, Abe 21. So Buyer Saikan and BVV High saying hi. Glad to have you around with us. Good morning to you. So, in the absence of no other questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, and in fact, it's quite an interesting situation in the market right now, as we have the market gone into a choppy phase in the last 48 hours. As you will see, price has since been caught within a range right now between the 14,750 and the 14,615 area to indicate the level of uncertainty in this market. And of course, we can tell why this is happening, as majority are looking forward to the Federal Reserve Chairman's speech, which is coming up much more later today. And as a result of this expectation, major key players appear to have pulled out of the market, waiting for clues ahead of this event, or even during the event and after the event, to give us an insight into where we will be going for today. So based on what we have here, we will need to exercise patience. But before we go into the details on the technicalities on how we are going to be positioning ourselves for today's trading session, I would love us to run through how the week started, so that for those of us who are not part of our live session prior to this one, will be on the same page with us. So at the beginning of the week, remember that we had this beautiful key level, which we are going to be talking about in a moment, around the 14,500 area, which we agreed at the beginning of the week that it is going to be playing a major role in determining how we are going to be positioning ourselves for this week. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for market conditions that support the idea of buying. Now, aside the key level here, we were able to observe that price was initially caught within a range at the beginning of the week, as we saw it confined between the 14,615 and the 14,545. Now, we have a range there, and of course, we do wait for the breakout or breakdown to give us an opportunity to trade. Now, prior to our live session on Monday, I told us all that I already had a sell position triggered here, and I said that for those of us who had missed out on that sell position, that we should hold on and see if the market will come back to retest the structure to give us an opportunity to join the downtrend move, which of course never happened. As we saw here, buy pressure resumed, and the inability of sellers to break through the lowest point price action has been for this week at the 14,430 was quite a beautiful signal that buyers may later be taking over this market. And I did tell us on that day that a break above of the 14,545, sorry, will be an opportunity to join a bullish move, which we of course did, as we rode that momentum all the way to the upside as price moved over 200 pips in our favor. Then we also talked about adding more buy positions to our existing trade if price action breaks out of the 14,615 level, as you will see here. And in fact, if you had missed out on that opportunity, the market came back to retest it to move further to the upside, and that one also moved about 130 pips before the bearish momentum began. And of course, if you had moved your stop losses accordingly as we projected, you must have been taken out in all the buy positions at a considerable amount of profit, or at a worst case scenario, break even, depending on where you placed your stop losses. Now, with the current situation we have in this market right now, where price has been consolidating in anticipation of the Fed chairman's speech coming up later today, how do we intend to position ourselves ahead of today's trading session? Well, first of all, and for the sake of those who are not part of our live session on Monday, Tuesday, let's run through the higher time frame quickly to see what things are looking like from an holistic standpoint. Now, if we scale up into the daily time frame, remember that we were able to spot a bullish trend which has taken over this market since the beginning of this year. Now look at since January of this year, price had consistently and uniformly found higher lows in this market, giving us this beautiful ascending trend line you can see on your screen. And of course, as long as price remains above the ascending trend line, we obviously want to be looking out for buying opportunities. Now, something interesting happened during the course of last week trading session, where we witnessed the first time price will be breaking down that ascending trend line this year, and that's quite a significant feat right there. And it's just coming right after we noticed the series of lower highs here, revealing the gradual momentum build up in favor of the sellers. Now there is a barrier here which has been negating the sellers' attempt in this market, especially in the last 3 to 4 months, and that is our key level situated at the 14,500. Now this is the key level I was showing you on the 1 hour time frame, which we agreed at the beginning of the week that it is going to be playing a major role in determining the direction of price action. So if price still remains above our key level, there are still chances that buyers could still take over the market. Now, if you look at what has been going on along this key level since the month of June, you will see how it has played a major role for participants in this market to buy the USTech100. Now, look at what happened here in the month of June. We saw buy pressure here. Fast forward to the month of August, we saw how sellers were finding it difficult to break through. And look at what happened here in the month of September stroke October. We saw the same thing happen again. Now, last week, despite the breakdown of this ascending trend line for the first time, you see that this zone here again negated the attempt by the sellers to continue the momentum to the downside. And as a result of this, we were of the opinion that this might likely be a retracement of that breakdown. Now, you know from a technical standpoint that whenever price action breaks down a key structure such as the trend line, this trend line here, let me show you one more time. So from a technical standpoint, whenever we see price break down this kind of trend line, we expect that price at some point in time may come back and retest the trend line to incite a downtrend scenario, or even climb to as far as that descending trend line to incite a sell-off here. Now, with the way things are going at this point, we need to be very, very careful to see and look for confirmations that truly price will be retesting the trend line to push price to the downside. Now, in that regard, we do want to see how market participants have been reacting to this area around the 14,750 to see if we have a chance of a bullish move to the upside a little further before the bearish trend happens, or we might likely see a scenario where the breakdown of the 14,500 for the first time in the last 4 months to incite a sell-off. Now, to have a clearer perspective into what is going on here, we will need to scale down to a lower time frame. Now, to do this, we will scale down into the 1 hour time frame where we will begin to see things more clearly. Now, this is the 14,750 area which we spotted on the daily time frame, and as you will see here, this is the highest point price action has been for this week, and every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers. Now, one interesting situation happened here yesterday. We saw, even though we had a break of the structure here, we saw our price came back into that area with a shooting star candle, which from a technical standpoint is a sign that reveals the presence of sellers around this area. And if this continues, there are chances that we might be seeing a bearish move. Now, the 14,750 at this juncture is going to be playing a major role in determining if we are going to be buying the asset today. Now, for me to buy the USTech 100 today, I would like to see price take out all the sell positions within this zone by breaking out of that structure, after which retest of structure will be giving us a beautiful confirmation to join the uptrend move. Now, to add to this is this ascending trend line we spotted here yesterday. So I would like to do some little readjustment about this trend line, as I think that we have a new trend line formation here. So give me a moment, let me spot this out, and I would like to give this a blue color to emphasize its importance. So we'll be deleting all this other trend line, as we now have a new trend line to work with for today. So we have this one right here, and probably price could still drop further into this one right here. And you know how we use our trend lines, of course. As long as price remains above our ascending trend line, we feel comfortable in the buy positions. And as you will see that since the beginning of this week, price action had consistently been respecting that ascending trend line every time. I think I'm having network issues, right? Can you see me? Can you hear my voice? Can you hear my voice? Can you see my screen? Please let me know in the comment section, please. This will let me be sure that we are both on the same page here. So if you can see my screen and you can still hear my voice, please let me know, or else I will just have to switch my router. Okay, so let's see what we have. I guess I'll have to switch my router then. Hold on a second, please. Give me a moment, please, everyone. Alright guys, so sorry about the breaking transmission. I guess I was having some issues in my network, but I think everything is fine now. If you can see my screen and you can hear my voice loud and clear, please let me know in the comment section. I'll really appreciate your feedbacks. So where were we? So we were talking about the newly identified ascending trend line, which I was able to spot a couple of moments ago. And you can see how this trend line has been respected in the last 24 hours. So if price continues to respect this trend line and we continue to find buy pressure above this trend line, then we can position ourselves just right above the 14,750 to capitalize on an uptrend continuation. So breaking out of the 14,750 will take out all the sell positions within that area to further give us a beautiful signal to join an uptrend move. However, if we consider how price action has been rejecting the 14,750 since last week Friday, in fact, if you look at what happened here on Friday, we saw selling pressure pushing price to the downside. So if we are going to be taking this into consideration, we are not going to ignore the potentials that the sellers could still come into this market. Now, if we are going to be selling, what is it that we want to see on this chart that will make us feel comfortable going to the downside? Now, the first and first here is, remember I made mention that we have a range where price is confined within the 14,750 and the 14,615 area, which is a consolidation phase. And of course, you know how we do it. Whenever we have this kind of range, we do want to wait for either the breakout or the breakdown of the range for an opportunity to trade. Now, in this case scenario, for me to sell, a breakdown of the 14,615 would have broken down that ascending trend line, hereby negating it and to give us a momentum shift. And if this happens, I want to be getting ready to sell. Now, for us to get ready to sell, we do need some confirmations to happen. Remember, we are within a very choppy situation and we cannot just sell or buy right away, as we'll need confirmations to make us feel comfortable in whatever position we are in. And this confirmation for sellers will come in the form of a retest of structure, signs that buyers are finding it difficult to climb back above the ascending trend line, and this would reflect on the chart as either a retest of the 14,615 or the retest of the ascending trend line, where continued selling pressure will give us an opportunity to sell below the 14,615 level. Now, if price action continues to the downside, remember that we also have an ascending trend line around this area, which interestingly lines up with that 15,545 level. 14,545 level. I don't know why I keep saying 15,000. So it's the 14,545 level, where depending on how price reacts to this trend line, and this level will now determine if we are going to be adding more sell positions to our existing trade or getting ready for another wave of bullish momentum. So if price goes on to break down the structure, a retest of structure will give us more opportunity to sell, while a further breakdown of this key level, remember that we identified on the daily time frame, that is the 14,000. Sorry, I just want to reduce this, bring it back in here so that it doesn't go too far off the screen. So we have this level here. So if price goes on to further break down that level, then definitely it's going to be a massive sell to the downside, as this level has never been significantly broken down in the last 4 to 5 months. So that is how we are going to be joining a sell move from that area. But however, if price begin to find buy pressure above the trend line, then this could still welcome buying opportunity. So as soon as price gets into the zone, if you had sold below the 14,615, please ensure you move your stop losses, secure the current sell position you have, while we wait and see how the market will react to that level. So this is my view here on the USTech100. So I do hope I made myself very, very clear. But if you feel that you need some further clarifications, or there is an aspect you really do not understand, feel free to let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. I see your comment, Ola. Good morning to you. Glad to have you around with us. Your question, unfortunately, is not something I will be able to answer on this platform. Okay. All right. Glad to have you around with us, but I will just encourage you to be part of these editions. And the more time you spend with us, you get to understand how this works. Patience is required, please. So with time, you will get to understand how it works. And if you have any questions, feel free to ask me. I'm willing to be of help in that regard. Xander09, okay, all right. All right, and I can see Million Hattie. Good morning to you. Thank you very much for the compliments. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard we're moving on to the next asset. I'm already out of time here, so I'll try to run through the next couple of assets on our watch list. All right. So the next asset on our watch list for today is the GBPUSD, and what a phenomenal bearish momentum we witnessed here in the last 24 hours. And unfortunately for me, I wasn't part of this trade. Remember, I told you yesterday that I wouldn't be selling, that if you are a counter trend trader and you're a scalper, you can take advantage of that move. And if you had done so, you'll be running with over 100 pips in this profit at this point, in over 120 pips in profit at this point in time, which is not bad at all. Well done to you for that. But let's quickly run through how the week started for us. Remember that we were actually buying the GBPUSD at the beginning of the week after we observed a consolidation phase just right within the 1.21660 level and the 1.21450 area, to emphasize the level of indecision at that particular point in time. And of course, because of this situation, we were trying to position ourselves in such a way that we can capitalize on that move. And based on the structures we saw on the higher time frame, the fact that price was sitting above a robust demand zone, we were of the opinion that price may continue to the upside. Now, in addition to that range, remember that we had this descending trend line marked out, which interestingly shares a beautiful confluence with the resistant line of that range. So if price breaks out of that resistant line of the range, price would also have broken out of that trend line to give us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And this was exactly what happened during the New York session, early hours of the New York session on Monday. We saw the breakout of both the trend line and the key and the resistance line at the 1.21660 to give us our first buy position for the week. And remember that we also added one more position at the breakout of this very important level at the 1.21800 area to maximize the potential of that bullish move. And in fact, we had over 200 pips running in profit as at the first day of this week, which is something very, very phenomenal to start the week with, especially on an asset like the GBPUSD. And of course, I do hope you moved your stop losses. Like we said yesterday, I told us all to move our stop losses to that area around the 1.22450 area, and if you did, you would have been taken out with a minimum of, let's see how many pips that was. That's 80 pips for the first position and about 60 pips for the second position, giving us a roughly of over 150 pips in profit on that buy position. And during our live session yesterday, we were able to identify an ascending trend line within that consolidation phase there, where we said as long as price remains above that trend line, we shall be looking out for more opportunities to buy above the 1.227 and the 1.22890 area, which never happened as we saw price nosedive to the downside. And I mentioned here yesterday that if you are a counter trend trader or a scalper, you do want to be taking advantage of the breakdown retest of the 1.22450 level, which of course happened to ride that momentum all the way to the downside. Now, one of the things we talked about yesterday is that if price drops into the zone, we shall be looking out for reversal patterns like double bottom structures or head and shoulder pattern to join the uptrend move, but it appears these have failed as price continues to nosedive to the downside. Now, going into the New York session today. Now, first of all, before we go into the details, for those of us who still have a sell position running right now, please move your stop losses and secure the current sell positions And based on this current structure, I will be suggesting that anywhere above the 1.21450 seems most appropriate. Remember, you do want to be given enough room for price action to breathe. Now, with a well-secured sell position at this juncture, what is going to be our next line of action for today's trading session? Are we going to continue selling the GBPUSD, or are there chances that buyers could come in considering the demand zone we identified on the higher time frame? Now let's scale up into the higher time frame here. Let's go to as far as the 4 hours time frame to look at what things are looking like from that perspective. Now, it's quite obvious that price action has been very bearish in the last couple of months, and in fact, we have descending trend lines which emphasize that. Now, there is something interesting about the structure where we have noticed how that area between the 1.21 and the 1.205 area had been playing a major role in pushing price to the upside, making it a temporary demand zone in the meantime. Now, if we look at the latest bullish momentum that happened here compared to the last one that came out from that zone, you will see that it appears that price had dropped a little bit to the downside, giving us signs that the momentum is gradually reducing. And whenever we notice lower highs in the market like this, it's a sign that sellers are gradually gaining momentum. And as a result of this, we do want to be connecting the series of lower highs here to give us something to work with ahead of the New York session today. So with a beautiful descending trend line here connecting the series of lower highs, it's quite clear that price is pushing to the downside. But in as much as we are seeing lower highs here, it's quite clear that we are yet to see a lower low to further affirm the bearish momentum in this market. As you will see here, that since last week, price is finding higher lows here, and if we connect the series of higher lows, we have an ascending trend line also to work with. And if we take all this into consideration, coupled with the impulsive move that brought us to this point, you can see that we have something that looks like a wedge, which of course from a technical standpoint projects a downtrend continuation. Now, if price goes on to break down this descending trend line, I'm of the opinion that we might be witnessing a huge sell-off going in the nearest future. Now, if we consider the Fed speech, which is coming up later today, I think it is appropriate that we remain very patient, as some volatility could come in anytime soon. So for those of us who still have a sell position, kindly move your stop losses, secure your current positions, as buyers too could still take over this market, leading to the breakout of that resistant line of that range to incite an uptrend continuation, especially considering the fact that price still remains above that demand zone. Personally, for me, if I look at this from a long-term perspective, I would rather prefer price to slice through this demand zone, retest it before I can join a bearish move from a long-term perspective. But at this point in time, I will still be considering a bullish opportunity. So let's see how the market will play out today, where the 1.218 area will be an area I will still look out for price breaking out of to give me an opportunity to buy this asset. But if price still remains below the structure and breaks down that ascending trend line here, retest it a couple of times on our lower time frame, then we can feel comfortable joining a bearish move at this point. So this is my view here on the GBPUSD. So I do hope you mark out these levels on your chart, as you will be needing them as a reference point to guide your decisions for today. And if you have any questions, let me know in the comment section. So because of my time, I wouldn't be taking a break, but if you have questions, drop them in the comment section. I will be checking them from time to time while I move on to the next and final asset on my watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD. And for sure, in the last 24, 48, 60 hours in this market, we are yet to make any significant opportunity in this market. Remember that at the beginning of the week, we had a buy position triggered after price broke out of this range, which we situated between the $1,978.50 level and the $1,965 area. And not until yesterday we were taken out of that buy position in a loss. Now, since then, remember, price broke down the 1,970. We talked about the breakdown of the 1,965 yesterday. This happened during our live session, and I did told us to move all our stop losses to break even. And if you had done that, you must have been taken out of that position in break even. And since then, price has been consolidating in this market, which further emphasized the level of indecision in the market. So since price action shook out our sell position at break even, the precious metal though had gained some momentum if you look at it critically, since that sell position was taken out yesterday, but though it's still caught within a consolidation phase. And currently the market participants are eagerly awaiting the Fed Chair Powell's speech later today, which is expected to provide cues for further price movement. Now, there is this prospect rolling in the market right now of the Federal Reserve insinuating to implement further policy tightening, and these have restrained the bullish sentiment and limited the upside potential for gold prices. Consequently, at this point, it is very important that we exercise patience and wait for new structures to emerge before we jump into any position. Now, let's look at this together from a technical standpoint and see how we are going to be capitalizing or positioning ourselves ahead of the next move. Now, first of all, let's take into consideration what has been going on in this market since the beginning of this month. And if we take that into consideration, it is quite clear that the market is on a bullish momentum. And to further emphasize this, we were able to connect the series of higher lows, giving us this beautiful ascending trend line to work with. And you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we shall feel comfortable in that buy position while we look out for more buying opportunities. Now, if we zoom into the current structure after identifying this ascending trend line and look at what has been going on in this market since the beginning of this week, you will see that price has been finding lower highs, giving me a beautiful descending trend line also to work with for today. Now, despite the lower highs we see here, price is yet to find a lower low to affirm that sellers may likely be pushing price to the downside. So it's more like a limbo at this point in time, as you will see that since the beginning of this week, price is still trapped within the $1,978.50 level and the $1,965 area. And in fact, the little attempt sellers had yesterday to break down that structure was quickly negated by this temporary demand zone around the 1,950 and the 1,955 during the New York session yesterday to emphasize the strength the buyers still have in this market. And as a result of this, we'll need to very patient at this point, though the structure is still looking very bullish considering the strong bullish momentum that started this week and this newly identified demand platform we identified on this market structure during our live session yesterday. Now, if we go to as far back as last week Wednesday, you will see how that level around the 1,950 and the 1,955 had played a major role in determining the buying pressure in this market. And we saw the breakout here happened, and in fact The sellers tried to break further down yesterday, but as you will see, we saw a beautiful hammer candle here, which further emphasized that buyers are still very present in this market. So for me at this point, I'm still looking forward to a bullish opportunity in this market unless price action breaks down this ascending trend line that has been supporting this bullish momentum since the beginning of this month. Not unless that breakdown happens, then I can consider selling unless that trend line is broken to the downside. And one interesting thing about that trend line is how it also shares a beautiful confluence with that support line of that range at the 1,965 level. So if we are going to consider selling at this juncture, we will need price to break down both the ascending trend line and the 1,965, where a retest of structure will be a beautiful confirmation to join that decline to the downside. Now, there is a caveat to this bearish setup. If price drops to the downside and gets into the 1,950 and 1,955 area, and considering this territory to be a strong buyer zone, we of course want to exercise patience around this area to see how the market will react to that zone. So in that regard, you do want to be moving your stop losses, secure your current sell position while we wait and see how the market will react to the structure, just like we did yesterday when price got into this area. So if price breaks down that zone, retest it, then we're going further to the downside, adding more sell position. But if buy pressure resumes and we begin to see something like a reversal pattern, we mark out our neckline and join the uptrend scenario. So that is how we are going to be selling here, but I doubt if price will break down that ascending trend line. But if it breaks down the ascending trend line, no problem, we want to get ready to sell. However, if price continues to the upsides and take out this descending trend line, well, for me, a breakout of this descending trend line is going to be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, now further emphasizing the strength of the buyers at this point. So a breakout retest will be welcoming buying opportunities in this market. But for me to be on the safer side and considering the fact that we're still within a range, I would rather want to see price break out of the $1,978.50 level. So I still going to have a buy stop order above the structure to capitalize on that uptrend move, while we are going to be having a wide stop loss here of about 90 to 100 pips so that we can leave enough room for price action to breed because of the nature of this choppy situation we have here. And if price continues to climb up, then we have multiple levels to maximize the potential of the move, like the 1,985 and the 1,990 area, to add more position to our existing buy trade. So let's see how this will play out in the next 24 hours, and we shall be back here again to review how well these assets have been doing. So this is my view here on the XAUUSD. So I do hope you are going to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I do not know if you have any questions. If you do, feel free to let me know in the comment section. And as usual, I'm going to be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we round off for today's trading session. I see your comment, Anim987. Good afternoon, good morning to you. Okay, it's afternoon here. Good afternoon to you, and glad to have you around with us this afternoon. So you're asking a question that the declination to inclination angle, does it remain the same anytime? I'm not sure I understand what you mean by that. I will be very grateful that you rephrase your statement so that we can all be on the same page and I can be able to answer your question accordingly. So please try to rephrase your statement, please. The descending trend line and the ascending trend line, will it always be the same anytime? I'm not sure I understand what you mean. Please refresh your statement while I wait for your questions. All right, everyone. It has been a wonderful moment with you guys today. And today we were able to take on 4 major assets. And one of the assets that is very profitable is the US USOILSPOT, which we were able to scope in close to about 500 pips so far this week, which is a phenomenal move for us. And we are still hoping that the current market conditions across the GBPUSD, XAUUSD, and USTech100, which are subject to what the Fed chairman will be saying today. Let's see how this is going to play out today's trading session. So I encourage you all to remain and exercise patience while we wait for our structures to mature before we jump into any positions. And for those of us who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you become in understanding how our strategy works and eventually be able to use this information you gather here to make your own independent trading decisions. I see your comment, Annie1987. You said yes. I really did not understand the question initially, so I want you to rephrase that statement to make it much more clearer for me to be able to answer you. That's what I seek of you, please. So let's have the question all over again, and so that we can, which are you talking about, the XAUUSD, or are you talking about another pair? If it's the XAUUSD, please let me know what really you are asking. The angle is, you mean the angle, will it be the same? I'm not sure I understand what that means, please. I'm sorry. If you still have time, you can send it again and I would answer it. I'll take some time again to wait for your questions while I round off here. All right, so I wish us all the best of luck today. It has been a wonderful moment, and I in fact look forward to seeing you same time tomorrow. Same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for the second half of the new week. So it's on this note, and in the absence of your questions, Annie1987, maybe tomorrow we can talk about this. I wish us all the best of luck today, and do have a wonderful and beautiful evening. Bye bye.